Good Monday morning. Welcome to Connect. This is Dustin Hobbs with the California Mortgage Bankers Association. Connect is our weekly video podcast featuring one-on-one interviews with movers and shakers in the mortgage industry. We've got a great guest today, and I'm excited to get into the conversation with her in just a minute. But before we do, we've got a sponsor message from our friends at Incelerate. Incelerate helps lenders close more loans through better borrower engagement as the mortgage industry's most innovative marketing and sales engagement platform. Incelerate CRM helps lenders manage workflow, contact strategies, lead management, referral, and realtor partners and reporting. Incelerate's engagement platform automates multi-channel marketing through social media, email, direct mail, text messages, ringless voicemail, and phone calls. It's all pre-built with the strategies and content to enable a better borrower engagement. Incelerate integrates with the software that's already powering your business today and into the future. In addition, the platform is SOC 2 and SSAE 18 certified to satisfy even the most closely regulated businesses, which includes banks with mortgage subsidiaries. So for more information or to check out a demo, visit incelerate.com, or you can contact the company at their phone number listed in the description below. All right, well, before we get started with our conversation with today's guest, I want to make sure and toss it to Susan Milazzo, the CEO here at the California MBA, for this week's weekly video update. Susan?
Hi, this is Susan with the California MBA here with your weekly video update. This week, I'd like to talk with you about the Mortgage Innovators Conference. We've made it free for lenders to participate this year, but we're adding a new incentive. If any of you register before July 31st, you'll be entered to win a $500 Amazon gift card that is sponsored by Incelerate. So visit our website, cmba.com, register for the Mortgage Innovators Conference, and maybe you will be our lucky winner. That's it for this week, and we'll see you next time.
All right, thanks, Susan. And now for our the main thrust of our conversation today. So I'm really excited to dive into a conversation today with Terry Schmidt. Terry is the president of Guild Mortgage, one of the nation's largest lender servicers and largest IMBs in the country, one of the best known companies in the country. Terry's been a good friend of the California MBA for a long time. She served on our board at times, and been really involved in our advocacy efforts and just, is everything California out here. She's, I believe, a native of California, and certainly the company, headquartered out here in San Diego, right in our backyard, has been a good friend of the California MBA for a number of years. So welcome, Terry.
Thanks, Dustin. I never thought of myself as a mover and a shaker, but I appreciate that.
Well, you are now, because I've said it. So let's start at the beginning here. I'm curious, what was your journey? What was your path from where you started in the business and how you got to where you're at now at the sort of the top of the leadership here at Guild?
Well, I have been at Guild for 35 years, which is extremely, unusual. And being in San Diego, got in the business in 1985. I was just out of college. And my background is I've got an accounting background. I was going to go into public accounting, and I just loved this business, and I stayed there. And Guild, my foundation is in San Diego. My family's there, and so I didn't want to leave the area. And Guild there weren't very many companies left in San Diego for a period of time. So I just stayed along at Guild, and we just kept building the company. The company was founded by one man, Martin Gleish. He was developer, and we're celebrating our 60th anniversary at Guild, August 10th for Guild, for the company, which is pretty cool. And he was a first-time home buyer, first-time builder for first-time home buyers, and so he actually started the mortgage company to assist with the financing for these homeowners. And so we've kind of kept that legacy going. He stopped building in the 70s and kept the mortgage company going. And in 2007, he actually decided to retire, sell the company. And we did a management buyout in 2007. And at that point, we were still pretty small company. We had $1 billion in origination volume average for the year and $2 billion in servicing. And today we are going to close over $30 billion in loan originations and $60 billion in servicing is where we'll end up this year. So it's quite a Cinderella story. it's been a lot of fun.
Yeah, absolutely. I mean, you guys have definitely, it's been amazing. Just, from since I've been here, you guys have just grown, enormously in that time. And I've been one of those companies that even, through the financial crisis, you guys were solid. I mean, it was one of those things that you could really tell what companies were sort of doing things right and which companies weren't. And you guys, certainly the way you came through the financial crisis and out of that, I think that really was a good testament to the leadership you guys had. I'm curious, on when it comes to your background, you've got one of the more unique backgrounds, I think, as someone leading a mortgage company these days. So many of the people I talk to, specifically on this podcast, that are CEO, president level folks at mortgage companies, they almost universally started out as originators. You started out on sort of the opposite end of the business. How has that changed the way you approach leadership and just that different perspective you've got?
I think as I grew up in the business, that the business became a lot more complicated, and the transactions, what you needed to, as far as investors, financing, raising capital. So I think over time, the need to have that financial background became a lot more important to the industry. And we had when we did the management buyout, we had a great platform. We had a great fulfillment, great operations, because that's our background. Marianne, the CEO, and myself, it's our background. And the sales side of the business was something that we needed more leadership. And so I think for Guild, having that combination of we filled in the gaps on our sales leadership, the sales leadership, and the financial leadership that we have, as well as fulfillment. All those three really need to work really well to be successful in this business. So that's I think that's really helped us.
Yeah, I can see how. Yeah, especially as you mentioned, it was things that have gotten not less complicated, far more complicated, even just in the short time I've been observing. So let's sort of fast forward to today's world. How is the company sort of adapting to the COVID-19 crisis, both maybe internally and with your interactions with customers?
Well, first of all, the safety of our employees and customers is always first. And so right away, we went to a remote environment, and we followed the CDC guidance, all the state guidance, federal guidance, local guidance, and we've continued to do that. Even though we're an essential business, all of our offices are open, but 95% of our employees are working from home and still working from home. And we're really pretty much that's status quo for now until this thing has been settled down. We think it's going to go into first quarter of next year, certainly. And so we were fortunate enough to where we have the technology to be able to migrate to that really, really quickly. And so we have not missed a beat. And I think the big thing is communication, over communicate. I mean, we have over communicated in so many different ways. And we've got constantly initially when all this happened, we had daily executive calls, and we're just like I'm seeing you today. Everybody was on video conferencing, worked really well. And so we had calls every day. Then now they're every week. We've got town halls with all of our entire company where they can ask us questions. We answer whatever we can and get back to them with anything that we have to follow up on. We did our first virtual sales rally and pulled it off. Went great, got great feedback. So I think the key is just to make sure that everybody's really staying engaged, and you can keep the communication lines open. And we're doing surveys, and our engagement with our employees is actually even better than it was before all this, which is pretty incredible. And I've heard that from other lenders as well. On the customer side, same thing. We've got the technology to work remotely and communicate with our customers. And the e-close, we have a full e-close solution from start to finish. And I think had we not gone through this, we'd still be working on it. And we've helped some customers that had COVID that couldn't leave their home, and we were able to do their transaction for them. So we're really excited about that.
Yeah, I have to imagine that, especially the e-close, that's got to be a big advantage for you guys going forward. Once the pandemic passes, I mean, still just dealing with borrowers that are remote or military families overseas, that sort of thing. I mean, that's got to be a big advantage for you guys to be able to do that now, fully online.
Definitely, super excited about that.
Yeah. So, a question for you. Speaking about originations, you guys are not only one of the bigger originators in the country, but one of the largest servicers at this point. What's that pressure like right now on both sides of the business there, on the origination side and the servicing side? How is the pressure different, the same? What's sort of the temperature around the office there?
Well, there's pressure on both sides, of course. They're just different, right? On the origination side, we are doing volumes that we never ever thought that we would be doing. And our volume, like everybody else's, our volume's up 50% for the year. And we're going to break records. We're breaking records every single month. And it's just keeping everybody they're so busy, they don't have time to breathe, and trying to serve all these customers, making sure their transactions get taken care of. It's just the capacity issue all around. It's capacity with fulfillment, with financing, and what have you. So it's that part of it. It's a good problem to have, and everybody's loving it, but everybody's really tapped out. And then on the servicing side, the issues are completely different. I mean, we're dealing in an environment with this forbearance that, we've never been in this world before. And thanks to, the government responding so quickly and getting involved, I think we're settled in a bit. But, it's like having to help these customers getting technology up to speed fast enough to where you can support the level of call activity and guidance that you have to give these customers. It has been challenging, and we're doing well, but we don't know what we don't know. I mean, how are these customers all going to come out of forbearance? There's going to be different options, and so it's definitely challenging, and staffing up for call volume, etc. It's a lot. And then the liquidity needs for all this has been, that's challenging. We spent 2 months just getting a model together just to understand what we think, best case scenario, base case scenario, worst case scenario, and what does that look like with our liquidity needs. And, we feel like we've got it all under control. It looks good. But it's the unknown.
Sure, absolutely. Well, and particularly, like you said, people coming out of forbearance. I mean, I haven't really heard, too many people talk about that, but I think you're right. That is a huge concern. Not just everyone going into forbearance, but then what happens at the end? What does that look like?
And preparing for it, right? I mean,
right. You got to make plans now for sure. So looking ahead, maybe at the recovery in general, the economic recovery, what's your sense right now on, and obviously things are changing, minute by minute and day by day right now, but what's your sense on what shape the recovery will take, or what it will look like, and even maybe the housing and mortgage market in general, or specifically, what's your sense on what things are going to look like going forward?
Well, we think that with the forbearance as a servicer, that this is going to go through 2022 before we get through that whole process. But I do think that the silver lining is that this pandemic did not start in the mortgage business like the Great Recession did. We're in such a much better place. We've got customers have more equity in their house than they've ever had. And, the credit quality of the customer is way better than it was way back in, 2007 timeframe. So I think we're on solid footing in the industry, and with the shortage of inventory out there, it's really keeping the sales prices steady, and I don't see that that's going to change in the near future. So I think the mortgage market is in a great position right now to get through this, but it's just the forbearance piece and how that kind of plays out through 2022 and how that impacts servicers and the customer. But I think everybody's going to be okay.
Yeah, I think you're right. Again, the forbearance, I think so much is going to hinge on that and what that looks like and how long that takes, if there's more government action that extends it at some point, or something along those lines. So I'm curious, you kind of hinted at the improvements that you guys have been able to make when it comes to the engagement with borrowers and the service level that you can give borrowers right now. How is that? How are you guys continuing to change that and really evolve that mortgage experience and make it even better?
On the servicing side, we have to use technology. So we're trying to have technology available that can drive the customer to decide, based on questions and answers, which direction they think they're going to be going forward on the forbearance. Because really, servicers right now, it's just extremely difficult to be able to handle the call volume, and so you've got to have a combination of some different techniques. And we also we're doing lots of videos where we're explaining the process, the different options. So we've got some different avenues. And I think on the origination side, it's really this whole e-close that we're working on a lot of other things behind the scenes to make the process, the customer experience, more efficient. Bots, artificial intelligence. We're doing a lot of that on the back end. But I think the customer, as far as what the customer sees, is that e-close has been huge.
That alone sort of changes the game for sure.
Yeah.
As someone with 4 kids, the idea of going and doing the closing, trying to find a coffee shop right now to do a closing, and what am I going to do with the kids, and the idea of being able to point and click and just do it on my computer, that's quite appealing right now. So let's switch gears a little bit. I'm curious to talk more about sort of the corporate culture at Guild. I think you guys have sort of a unique culture there. And you've always, over the years that I've known you in the company there, you've always done been pretty consistent in promoting women within leadership and just promoting from within. I mean, I'm always amazed. You look at sort of the leadership at Guild, and it's really steady over the years. The same group of people have been at Guild leadership for a long time. So from your perspective, how has that made that culture unique, and what advantages maybe does it give the company?
Well, I think we never saw ourselves different, being so female focused at the leadership level, and but I do think it's helped us recruit really great, capable women. I mean, women really do gravitate towards female leadership, and I think that's been a big plus for us. And we have done a lot of we do believe in recruiting, and as well as really promoting from within. That's been something we've been very, very supportive of, and we've had to fill in some areas where we needed a little bit more leadership. So we've got a nice little balance right now. But yeah, I think for us, we've always had this culture of listening, of inclusion. And so everybody really does feel, and they do have a voice, and we want to hear, what's working, what our field, corporate, what works for you, what doesn't work, how can we fix it? Even the technology that we develop, the user community, we go down deep into the organization. It's not just that we're looking, up here to say, this is how we're going to do this. This is how we're going to build this technology. It's really, let's go down to the ground floor and what do you need? What's working? What's not working? And I think that's so that it really permeates our entire culture, and it's made a huge difference.
Yeah. Well, and as you mentioned with the technology there, do you think that the town halls that you're able to do now virtually, do you think that helps sort of bring out the opinions and perspectives from the employees as you're sort of working through this, especially with everyone being remote?
Oh, absolutely. Yeah, that's certainly helped. The way we kind of have put that together is because we've got 4,000 employees, so you can't have everybody
at the same time, right?
Yeah, it's kind of huge. But we send out questionnaires and say, what's on your mind? And then we kind of take the top 20. And if we've got the same question over and over again, then we'll address those first. And it's worked out really well.
Yeah, well, that makes sense. And yeah, like you said, I mean, it's kind of hard. It's different, I imagine, from when you first started with a smaller group where you could just all get in the same, conference room at the same time and, hash things out. Interesting. All right. Well, I'm curious then, getting back to sort of how you guys have sort of set your leadership and who you promoted and how you've done it. How do you think then that mortgage companies in general and maybe the industry overall can do more to promote, sort of diversity in leadership? And I say diversity, I mean sort of all forms of diversity in leadership.
Yeah, I think for us, our diversity, we've done pretty well. Our numbers look pretty good, and for the industry, but we feel we can always do more and we can always get better. And so we actually have, it's a strategic initiative of ours, is to really look at, how do we go about getting into getting the right people at Guild, getting into the right markets, having the right products. I think for us, being a first-time home buyer and a state housing agency, a promoter of that program, it's naturally been something that we've always gravitated towards anyway. But we've recently announced a partnership with NAMBA, and we're really working with them to come.
The National Association of Minority Mortgage Bankers. Yeah.
Correct. And to really put a strategic plan together with goals for getting new talent, recruiting, existing as well as new right out of college people right out of college to get into this business, and making sure we've got the programs to support that and the coaching. And so we're really excited about that.
Right. Well, we're getting a little bit up against the clock here, so a couple more questions and then we'll let you go. As someone in the sort of that president's chair and thinking about the future, because you've got to be obviously long-term thinking more than just what's going on today. What issue keeps you up at night, even maybe beyond the pandemic, or maybe that's the only thing that keeps you up at night these days?
Well, in March, I didn't get great sleep in March. I'll have to admit that. Now I'm sleeping much better. Yeah, I would say that I think the mortgage industry and housing, I think that's the U.S. How do I say this? That is the foundation of this country, is housing, and I don't think that that's going to change. But what keeps me up at night is just the political environment that we're in. And the great thing about this pandemic is when both parties came together and came up with a quick solution. That was fantastic, and we need to do more of that. And that concerns me. I would say that how the GSEs get out of conservatorship and what happens there and how that impacts the industry that's concerning. And I would say just that we can't go back to the margins and the cost structure we were in 2007, because we're not the same. We've got regulatory compliance. it's expensive. And so the margin compression is always an issue that's concerning.
Yeah.
We have to be aware of.
Well, that's certainly enough to, if not keep you up all night, keep you up at least maybe part of the night, and limit your sleep, I should say. So you mentioned politics, so we'll maybe close out with this question here. How crucial then would you say is the advocacy work? And this is a sort of a softball question, but I'll tee it up for you. How crucial is the advocacy work that groups like the California MBA and the National MBA that I know you're in, you work with very closely as well? How important are those advocacy initiatives right now?
More important than ever. We've always supported, as you know, the CMBA and the MBA, been very supportive. And we have this very fragmented industry, and we need to have a voice at the state and federal level. And the only way I think we can do that, because we have such a fragmented industry, is to have these associations to support them. And I'll have to say, this AB 2501 that you guys were successful at defeating, that came up really fast. And had we not had the CMBA really and the lobbyists supporting those efforts, we might be in a much different position. And at the federal level, the MBA, those people have worked tirelessly, hugely long hours, long weekends, just with these legislative actions that come forward so quickly, and there's unintended consequences, right? And they read the details, they comb through these things, and we need it. We would not be where we're at today had it not been for the MBA and the CMBA. I can't thank you all enough for what you've done over the last 4 months, let alone many years. I appreciate it.
Well, hey, thank you for your support, Terry. And I think you make a good point there, and particularly, what you mentioned earlier in the conversation about the complexity of the business now. I think particularly when legislators, depending on how urgent a crisis is, try to craft legislation in a really fast manner, I mean, that's where you run into problems, because as you said, I mean, the business is so complicated right now, it's almost impossible to kind of just throw together a bill that has a big impact on a complicated industry like ours. So I think you make a very good point there. Well, hey, Terry, thanks again for the conversation. Great to see you again, and hopefully we'll see you in person at some point in the not too distant future. So best of luck to you and Guild going forward, and we'll see you soon.
Thank you much. Take care.
All righty. Well, and if you enjoyed this conversation, make sure and subscribe to our YouTube channel here. You can also listen to our weekly podcast every Monday morning on Spotify, on SoundCloud, and Apple Podcasts. And we'll see you next Monday morning on Connect.